All right. Good morning, good afternoon, and good evening to all of you from whichever region you are viewing this video at this point in time, or maybe in the offline mode. Uh, and welcome back after a break of one day. Wasn't there yesterday due to non-availability of. I was traveling actually, so. Let's get started with the UK come Asia live session. It is 2:30 a.m. Eastern and 1 p.m. Indian Standard Time. And as usual, we'll be discussing wave counts or projected wave counts or proposed wave counts for the euro, the dollar index, and Nifty 50. Right before we begin, as a normal practice, a general disclaimer I need to read out. Just to follow the norms and rules and regulations locally as well as internationally. So it says that, dear traders and investors or brothers, be aware that this channel sessions are solely for the purpose of education and specifically about the wave counts, the Elliott wave counts, the trend lines, the Fibonacci ratios, and support resistance. Any potential direction or the trade direction it means discussed here should not be considered as any form of personal or professional solicitation or advisory to trade or invest either in forex or equity or any other segment. These sessions are specifically for the purpose of spreading awareness and to help take informed decisions. You are hereby humbly requested to look into your personal risk aptitude and also take financial advice before putting any of the above discussions to use if required. Also be aware that trading forex or any other margin instruments should never be considered as a fixed return on investment. Please be aware that the trading into such markets can be risky and one can lose all or at times more than invested sum as margin. If you have any query or doubt regarding the content of the videos or the educational stuff which are already uploaded, kindly leave a comment or write to me at my email address, and I'll be very glad to get back at the earliest. Alright, so let's get started off the daily chart in the euro. I'm going to quickly touch base with the wave counts which we have discussed earlier on. Warm welcome to all of you who are joining in fresh. I remember November 21st, 2017 when it all started with the grace of God. I knew nothing about what is YouTube, and suddenly an idea came. Just with one member, it's glad it's not a stupendous number, but we are 221 right now, and I'm definitely sure with the kind of word of mouth spreading and the consistency maintained, this number is simply going to increase going forward. Alright, so let's get started off. The wave counts on the daily chart will gradually go down to the 4 hours and the hourly charts for the euro, and then we'll pick up dollar index before Nifty. I think this is the last time when I'm discussing the daily waves actually, because we've discussed this time and again, and just to keep the bigger picture in mind, I'm doing it one last time. Otherwise, from tomorrow onwards, we'll be touching base with the hourlies and the 4-hourly time frames. So you've got waves 1, 2, 3, 4, and most probably we've also gotten the potential fifth wave terminated right there. Now that termination point around the 25, 55 could be the first leg of the beginning of an uptrend, or it could be wave 4 sorry, of a termination of wave 4 of one larger degree, there it is, as an expanded flat. Whatever the case, it could be whether it is the beginning or termination of the first impulse of a new uptrend, or the termination point of wave 4. What we are looking is lower from here. Ideally, if we spread across the Fibonacci numbers and the trend line, it could potentially drop lower all the way towards the 1.12, even if it is a meaningful retracement that it has to produce, right? That's the 61.8% mark, preceding the 50% mark, which is at 1.1525. Also a major support termination point of wave 4 is found there, right? So watch out for the 50% retracement or the 61.8% retracement, even if it is the beginning of a new uptrend altogether. And in the case where it is the termination point of wave 4 of one larger degree, that clearly implies that price action is going to go much lower than anticipation. Actually, it should ideally go below 1.0350. That is too early to project and predict, but if it is a part of an expanded flat, yes, that should be the point you should be looking for. In any case, the subset or the most probable trade direction for now should be looking lower towards at least the 50% or the 61.8% Fibonacci ratios. All right, let's see. I think the trend line is just passing around the 61.8% mark. After a while, it should be crossing 1.13 and providing some formidable support for prices to hold above the trend line, the north side of the trend line. All right. So that's the daily chart. A bigger picture looks like a continued safe strategy should be to look to sell on rallies. Now enough evidence shows that wave 5 is already terminated. I mean, you can also look into the head and shoulder reversal pattern, which has been developed, traditional head and shoulder pattern. Let's go on a 4-hour chart and find out over there. Let's first get rid of this stuff here. All right. That's the last leg rally. I'm drawing the trend line through lows over there. First one is 1.1927. The second one being the February 9 lows, and then we can also see that the last leg 5 waves unfolding as a 5 waves rally before it reverses lower. For those who are traditionally inclined to play the head and shoulder pattern. This is what it is. Gradually we should be looking lower, but let's not speculate on what price actions could be right now. It is just about producing an engulfing bearish, but it's not yet complete. Right. So as far as the head and shoulder pattern is concerned, you've got your head and the left shoulder territory, potential right shoulder up there, and the book value, the neckline was already taken out quite a back, dated. I think it was the 1st or before the 1st of March. A traditional head and shoulder pattern would indicate that we can draw a protective resistance trend line actually. Connecting, this is not an actual trend line because we don't have a low in place yet, but that's just a protective trend line which confirms or till the time prices remain in this area, I mean the sell zone of the market, the sell zone on the trend line, that is this area all the way, that's the sell zone. Till the time prices remain into the sell zone, should be looking to print lower lows and lower highs, and bears should remain in control. Alright, that was the conventional head and shoulder reversal pattern, straight head and shoulder. If we go by the Elliott wave counts now, if you can add that here, that could be the first leg of a higher degree, followed by an ABC corrective wave 2 of the same degree, and now the change in degree, wave 3, that is 1 of 3, and question mark, I'll be putting question mark, 2 of 3. Right. Ideally, if it is a 2 of 3, then prices should stay below 24.45, 24.50 going forward. Alright, so if bottom line, if bears are going to remain in control for this chart, prices will ideally remain below 24.45, 50, and in a broader sense it should remain below 25.50, of course. Alright, so bears kind of looking to regain all their control back into the Euro USD counter, and exactly the opposite can be seen or witnessed in the dollar index. Let's go there. Beginning the daily chart, if you have not been following the story from the beginning, a very quick overview for the wave count, or potential wave count, I should say. That is the first leg, wave 2, extended third wave, followed by wave 4, and finally a fifth wave dropping lower, forming new lows right around the 88.25 mark. That was a surprise low. I mean, we were anticipating it to go even lower towards the 88 mark, but that surprise snap rally has now almost developed into the potential reversal in trend, I suppose, at least for now. It would be an absolute speculation if we begin to talk that the trend is reversing and that the dollar is now resuming to move into the uptrend. Yes, it is an uptrend, but the right word would be a counter trend rally. Right, so 5 down should ideally be followed by 3 up. So we've got 5 down followed by 3 up. We're done here. We are done with 5. We are most likely beginning the first leg of the 3-wave corrective rally. All right, now this is just the first leg. I mean, we are just about beginning to cut loose on the first leg. All right, now at a smaller degree. So where should we be looking for prices to go and terminate, even if it's a counter trend rally, not an uptrend? Please remember there could be a potential uptrend in place as well, but more probable scenario right now should be not to speculate on an uptrend or resumption of an uptrend, but to at least expect a 3-wave corrective rally. Now, if it goes and hits 5 waves, that's a different story altogether. So resistance seen around the 50% mark, around the 96 or 96 something, 96.03, which is very closely followed by preceded by the 95.14, and the 61.8% mark drops all rallies towards the 98 mark. So in short, we are looking for a counter trend rally to either terminate around the 50% or the 60% around the 97 mark. Alright brothers, that's the story on the daily chart. Now if we go back on the 4-hour chart, and let's have a quick discussion on the potential conventional pattern which is forming, and also the Elliott wave counts or potential Elliott wave counts. Trendline break, resistance break, that probably was the first leg on the north side, right from the 88.25 through 90.93. So the wave count suggests that could be wave 1, wave 2 terminating around the 50% mark, not going much deeper as the EURUSD did. It went all the way up to the 61.8% retracement euro, and if that is if this wave count suggests a second wave terminated right around the 89.40. So we've got wave 1 of higher degree, then followed by wave 2 of the same level. That could be an indication that we are into early stages of the third wave. We're not speculating on what it could be, but waves 1 and waves 2 with a question mark. That's a realistic, more realistic wave count analysis. So if this count needs to hold, or if it is true to hold, then ideally prices should remain above 89.40 going forward, and broadly above 88.25, of course, right? So that's the wave count presentation. Then if you go by the conventional pattern, what possibly we are witnessing here is an inverted head and shoulder. That's your head in that case, left shoulder, potential right shoulder, and that's the inverted head and shoulder pattern. By all means, if this pattern holds, as we said, even the Elliott wave theory says the same story. Prices should ideally remain above 89.40 if this pattern needs to hold, and that's what is the potential right shoulder where you normally strike, right? All in all, inverted head and shoulder story with the potential wave count suggests that bulls could, you never know when, that's for anybody to speculate, but bulls should most probably begin to gain control and print higher highs and higher lows going forward. Alright, let us have a quick view on the Nifty 50 before we bring a pause to this session. Not speculating on what wave counts we were discussing previously, we had potential fifth wave termination point around the 11,200 mark, which was aptly followed by 5 down. So if we look at the lower degree, that's the same story actually. 1, 2, wave 3, ABC, wave 4 and wave 5. Now wave 5 might have just terminated right around the 10,150 mark, which is giving us the liberty to plot it as wave 1 of 1 higher degree, or wave A if it's just going to be a corrective drop. It could be a 535 zigzag as well. Alright. With that in view, what we were discussing last week was a potential rally, and that's what we are beginning to see cutting loose on the north side Nifty right now since a few trading sessions. And don't be surprised if you see this rally continuing at least one more time, maybe towards the 38.2% resistance level, which is seen at 10,500 levels right there. Or it could be potentially pushing into the 10,500, 10,600 mark, hit the resistance and then reverse, or it could potentially go all the way towards the 10,777 as well. I think let's try and do a trend line, which we have not done the last time. Let us see if the backside is being tested, or it is still having some room to go on the north side. Trend lines, remember brothers, believe it or not, this trend line is a very simple tool, but it's very effective, believe it or not. So it's testing the backside of the trend line. See, hitting straight up there, going and testing waters up there on the backside of the trend line. Possibly the outcome could be wave 5 might have not yet terminated, and it could be wave 1 of 5, 2 of 5, 3, 4 and 5. So wave 5 can go and terminate right around the 10,000, even better, the 9,700 mark. That would complete 5 waves, or that could be completing 5 waves of a higher degree, and wave A or 1 right there. Right, that's the other story. So you never know if the fifth wave has terminated around 10,150 mark. That's good. If not, and if that is wave 1, let's find out what should be ideally the fifth wave termination point. I'm just taking 38.2% distance traveled by waves 1, 2 and 3. Fibonacci ratio showing around 9942. And let's find out, let's do it manually as well. 11,171 and 10,281, almost 1,000 points drop. 40% is 400. 10,600 less 400, yes, is around the 10,200 mark. I think what we have done right now is making much sense. we might have just completed the first 5 waves. That leaves us with either prices are going to find resistance around the 10,500 mark, or it is already finding resistance and it should continue lower. In short, Nifty 50 is far away from the hands of bulls at this point in time. The counter trend rallies should not be taken as any opportunity to go long. All these counter trend rallies should be taken as excellent opportunity to turn towards the favor of bears. Actually, downside remains quite a bit on the south side. We are not speculating on what prices it could be, but it should be quite a bit on the south side. Let's see where the resistance is being found, which should be clear in the next 24 to 48 hours, whether it is 10,500, 600, and then we'll start figuring out the potential termination point of this bearish move. All right. So with that note, let's bring this session to a pause again, and as always, thank you for being here either in the online or watching in an offline mode. And as always, thank you for helping me spread the word for this channel. That is more about you, less about me. It's education where all of us are learning. So keep spreading the word, brothers, wherever you think it could be of some use to whom you are sending the link to. Alright then, I'll be back again tomorrow during these times. Until then, take care and God bless. Stay tuned, stay subscribed, and goodbye.